Some welcome news for investors. It appears most stock markets are rallying after a huge sell-off yesterday. CBC senior business reporter Nisha Patel has been tracking the numbers. She tells us what's happening.
Well, we may have actually dodged a bit of a bullet there, Andrew, with the TSX missing out on a lot of that panic that swept global markets. So the TSX having a little bit of a delayed reaction to what happened on the global markets yesterday. Take a look at what's happening. A little bit of a sell-off for Toronto stocks, and we did see it down about 240 some points there. So that's about a little bit more than 1%. A down day, but definitely not the rout that we saw yesterday. Also, south of the border, stocks are really bouncing back in the green. The Dow Jones is up as well. The Dow Jones, we'll take a look at a live look of that there, up about 594 points, so that's close to 2%. The S&P 500 and the NASDAQ also up 2%. Overseas markets clawing back losses as well. The Nikkei saw its best day since 2008, up about 10% after that big loss yesterday. But if you zoom out and take a look at how the TSX has done over the past year, let's say, it is, even with the losses of the past 2 days, up about 8% overall. So despite these past few days of turbulence, we are still on the whole doing quite well. Analysts say, taking that into account, markets have been due for a little bit of a pullback. And there's an old saying, Andrew, that stocks, when they go up like stairs, but when they go down like an elevator. So investors are bound to take notice when they go down like they did yesterday, and it really was quite a dramatic day.
It was quite a dramatic day. What drove so many investors to bail yesterday?
Well, there's been a lot of negative sentiment that kind of piled up and swept everyone into a bit of a panic that gained momentum, starting with the Bank of Japan last week, hiking interest rates. And so what happened was that a lot of investors who had borrowed money may have had to sell stocks in order to repay those loans. And so that sort of really tanked the Japanese stock market. Friday and Monday were the two worst days ever for that market. And then a weaker than expected U.S. jobs report really kind of started to stoke concerns about the U.S. economy and whether or not the U.S. Fed has waited too long to lower interest rates, and whether or not that could lead the U.S. into recession. But there's never really one direct reason. It just ends up being kind of a lot of negative sentiment that snowballs and ends up having a market day like we had yesterday. But when you look at the fundamentals, for example, the American economy is still pretty steady. Unemployment is still quite low. And the prediction from Goldman Sachs, for example, of an American recession is only at about 25%. So retail investors, people out there who are just every day looking at their portfolios, a lot of personal finance experts say when you're looking at what happened on the markets like yesterday, just take a deep breath and don't overreact.
Senior business reporter Nisha Patel.